Signed up here today, probably decided to do online as well. So we had like 20 signed up and then 20 or 30 online.
Yeah, something like that.
Okay, go. We're live.
Okay. All right. Hello, everybody. Thanks for joining us in the room here and everybody online. Glad you could make it this morning. So today we're having kind of a different bagels and business than we usually do. So this is going to be a funding panel. So we brought, the real experts here so they can talk to us about, funding your small business finance. We're going to go into a lot of topics today. And then you out here in person or you online, please send questions in if you have them, especially if there's specific questions that, may benefit everybody. And then I guess I'll just introduce myself really quick. My name is Paul Wolford, and I am the Director of Outreach and Alumni for the Goldman Sachs 10,000 Small Businesses program. Serial entrepreneur. I keep, getting into startups and been doing that since I was a teenager pretty much, so can't stop. I'm addicted. No. And I think we'll start off today. I would introduce all these lovely folks, but I'm not going to do that because I'll probably butcher it. So I'm going to have each of you maybe just go down the line and tell us a little bit about yourself, what you're passionate about, tell us about your organization, and we'll just start there.
Me?
Yeah, go ahead.
Is that the camera?
That's the camera up there, and this is the microphone. It should pick us up all fine.
Cool. So my name is Sara J, and I'm with the Utah Microloan Fund. I'm born and raised in Utah. I currently live in Rose Park. I'm also in the startup scene. I helped found Even Stevens, the sandwich shop chain. So if you're familiar with them.
Shout out. Yeah.
Before they new ownership, that's okay. So I kind of started out in startups, and that's what got me into, loving working with small businesses and being a part of the community. I'm now the program manager of training and outreach at the Utah Microloan Fund. So basically that means I help with all of our client coaching. So after you become a client with us, I help you with whatever you need to become successful with your business. And if I don't know something, I can turn to anyone here and send them their way. And I also do our social media and marketing, so kind of dual role there. The Utah Microloan Fund, what we do is provide loans to small business owners. And the cool thing about us is you can be either a startup or an existing business. So some people don't want to lend money to startups because you're a little bit more risky, but we like that. So definitely come to us if you're looking for funding for your small business. We lend up to $50,000, so pretty good chunk of change. So yeah, thanks for having me today.
Thank you, Sarah.
I am Kimberly Holley with Mountain West Small Business Finance. We have several loan programs for existing businesses. So if you're starting places to refer you to on this lovely panel. But we do fixed asset, owner-occupied acquisition. We also have some smaller loan programs, the Community Advantage. We also manage the Utah Small Business Loan Fund. Yeah, love to be.
Did we turn off our camera?
Sorry, hang on, guys.
Technical difficulties there.
I forgot the passion part.
Yeah, you're all good. Is that control the camera?
Oh, it must be powered too.
It's not working where it is.
Okay.
So
I think the cable for it's been having issues.
has it?
Yeah. Well, we can keep going.
Yeah,
We can
just
still
keep
listen.
going.
Okay. All right. Ephigenia, is that how you say your full name, or what do you go by?
Efi.
Effie's better?
Yeah.
Okay.
Efi is my full name.
Ephigenia? Okay.
Efi's a simpler way.
Excellent.
So my name is Efi Neofitos, and I work with the Women's Business Center of Utah as Capital Access Manager for Kiva, which is a crowdfunding program that provides loans with 0% interest, no collateral check and no credit check. Really is the one when you've tried all your other options, Kiva is there to help you get back up in line to become bankable at one point again. The Women's Business Center offers one-on-one growing or choosing to pivot. We are there to guide them through those processes.
Good.
And we offer workshops and other resources that we've partnered up with the SBDC and Score as one of some of our partners. And I guess my background, I was raised in the small business lifestyle. My parents were all about business and restaurants from the day I was born. I feel like I was born into the restaurant industry and it's still in my blood. I feel I have a passion about it because I believe if these resources and these availabilities were there in those times, maybe we'd have some more family time. So I have a passion to really be able to balance family and business all at one. So that's me. And I speak Greek, Spanish as well to help in all different languages.
Wow, that's awesome.
Thank you.
Tell us about balancing family and business. How do you pull that off?
Still work in progress. But just, I think because when I was so young, all I saw was my parents, especially my father, right, being in the restaurant day in, day out. We never really knew our dad until we were at the restaurant working with him. And so being able to have maybe the resources of having some form of capital to hire an employee instead of having to do all the job yourself is, having that ability to learn how to delegate as well, having the resources to learn as well. My father is an immigrant from Greece, came here at 25 years old, and married my mom, went, to Greece. They met and then they came back to America. So the resources for them were not as available. So I think if they were able to have the resources to learn how to train and delegate, and plus having maybe an extra capital to not feel like they had to finance their whole entire journey.
Yeah.
Yeah.
Thank you. Thank you so much. All right, Luke.
Yeah.
Sorry to blind you again with the light.
Oh, sorry. I can duck here a little bit. Well, my name is Luke Thomas. I am with WaFd Bank. We've just rebranded from Washington Federal Bank. We are a regional bank, $19.5 billion asset bank in 8 states, West Coast, except for California. We have 232 branches throughout, and we are actually considered one of the the most financially secure banks in the nation. Newsweek and Money.com just voted us best bank as well. So we are really, really excited to be here today and talking to small businesses. I'm a small to medium business banker. I don't do a lot of startup lending, but I do a lot of startup accounts and services. So everything from your checking, savings, onto full treasury management as well. So we are a full service bank and very excited to be here and talking with you guys. My personal passion for business comes from my family having a small business, myself running a couple small businesses as well. And really, I get numbers, and I like to be able to explain those numbers and how that financial statement, your balance sheet, your profit loss, how that makes sense and translates into your world, and be able to do that on just make sense of it for you and your industry. There's a lot of nuances between each industry, and be able to find those differences and parse it into that language for you. It really brings joy to my heart when that light bulb comes off. So I'm here to help, and let's have fun.
All right. Thank you so much, Luke.
Yeah.
Appreciate it. All right. This might be kind of maybe a dumb question, but how do small businesses or startups know if they need additional funding? Like when's the threshold for that? And we can just put that up to the panel.
Well, that's a tough one.
I know, that's pretty broad.
And I think some small businesses don't realize that they need funding until after they need it.
Mm.
So really, I think the key is more finding the funding and the resources before you need it, so that you have it and have the availability of it for when you do get that pinch. Because you grow, you need employees, you have to spend money to start making the money depending on your industry. And so having those resources available and at your fingertips, having a relationship with a depository banker, it'll be easier to get funding when you do need it if you already have that relationship.
Awesome. That's a great answer. Does anyone else have a thought on that?
I can add just really having a plan, knowing your number. I mean, if you're starting up, really focus on getting your numbers organized from the very beginning, really knowing your next path, because sometimes you just jump in and hope that it's all going to line up, but not really knowing your, projections. So having a plan on what you really need the funds for and how you are going to, what's your rate of return for that item that you are asking for.
Okay, excellent.
Just doing a simple cash flow projection, those numbers are not going to be right. But as you keep on going, you can compare what your actual is to what your projected is, and then you can adjust that projected as time goes on. Take the 15 to 30 minutes a month to do that, because it's amazing the difference between a business owner that does and a business owner that doesn't.
Yeah. Anything to add, Sarah?
Yeah, just to Kimberly's point of, trying to anticipate, getting that funding before you need it. Something we frequently see is we have a lot of clients who make products, whether it's, vegan cookies or gourmet cheese, and they'll come to us and they like, I have this huge order I can make so much money off of it, but I don't have the cash flow to actually make the product.
So you have to even buy the supplies or equipment.
So that's where we kind of step in and help. Yeah, if you can anticipate those kind of things, and maybe you won't miss out on that order or whatever it might be.
Yeah.
Get a line of credit.
Yeah.
Get a line of credit early.
Yeah.
Yeah. And maybe let's talk about lines of credit a little. If that's kind of the starting point for a lot of small businesses, what's the best way to approach that? Like, how should you go about getting a line of credit? Where should you look first? And do you need like a small business account first before you start that? So let's go ahead and put that out there.
I think Luke probably is the
Luke,
best.
the one to tell you.
We don't have lines of credits at our institution.
Yes.
Oh, okay.
Yeah.
So, yeah.
Wow.
So at my institution, we look at lines of credit on a couple things. First is that relationship. So do you have that checking account with the bank already? That actually can matter up to almost 20% of the decision of whether or not you have that relationship established already. Now, it's not a big portion of it, but it is a significant part. When you're considering a line of credit at kind of that, after you pass that startup phase and you have 2 years of financials, it's not just the financials that you're going off of. It's also your personal credit, because the bank will look at, well, hey, how do you treat your personal credit? Because you're probably going to treat your business credit fairly similarly to that. And so making sure that you haven't jeopardized your business credit already by taxing your personal credit too heavily. The things that I look for within for a line of credit application on the financial side of it is simply just going to be your profit loss, as well as a loose balance sheet. It doesn't need to be a very well put together balance sheet. Get it, you're less than a few years old as in a startup. Now, as your business continues and matures, yes, you're going to want to make sure that you go and visit a CPA and have them double check your balance sheet, make sure that things are coded correctly, because a bank will go back and look at, hey, what are your liquid assets? What are your fixed assets? What's that mix like? And how do you compare to other businesses in your industry? The fun thing about being a banker is you get to see all those different books and compare all those different books internally. And so it does matter how well organized you are for that the longer you go on. For the line of credit piece itself, it's tough to say because each industry is different. And that's why the conversation with your lenders will give you a clue, where that will actually fall in for you. I'll leave this for kind of a caveat to all lending in general. A credit card is used for a borrowing need that is 1 to 30 days long. A line of credit is used for a borrowing need that is 30 days to 11 months long. A loan is used for a credit need that is 1 year or longer.
Wow, that's amazing. I haven't heard that before.
Yep.
Did y'all take notes? Okay.
Well, and
That was
most
good.
lines of credit, they want you to pay them down to 0 once a year. And so that kind of gives you that 12-month short-term liability. And then there's also a few different types of lines of credit. There's the SBA Express line of credit. There's a conventional line of credit, just depending on the needs of the business.
Excellent.
And we have a question online.
Yeah, go ahead.
Unless anybody else wants to comment on that.
He's got a
Yeah,
question too.
yeah.
Okay.
No,
Did you want to comment?
I was actually asking the question. I was thinking that, could you repeat that, the three things that you wanted to say? I think you only mentioned 2 different types of lines of credits.
Oh, I don't know. if
So there's
more.
different types of lines of credit. Washington Federal only we're a book lender, and so we only do lending on our books itself. Another type of line of credit is an SBA Express. The SBA will come in and back up 50% of that line in a default situation. And so some banks will offer that, and they'll offer a line of credit to a business that's just a startup too. And then there's lots of different programs that's in there. That's why talking to your banker is one of the most important things, because each bank is different and treats credit different, specifically lines of credit. The other thing that you were mentioning was resting a line of credit.
Oh, yes. Yes. So, talk to your banker too, because some, they want you to pay it down to 0 once a year. So even if you have something ongoing with it, they expect it to pay to 0 once a year. Like the SBA Express, it usually revolves for 3 years and then turns to a term loan after the 3rd year on the SBA Express. But you'll just want to check with the terms.
So I have a question on this line, and then I have an additional question. So someone is asking, Ryan is asking, are lines of credit only accessed through a bank?
Typically, for the most part, yeah.
Yeah.
It's really rare because a line of credit is revolving, meaning once you use it, pay it back, you can use it again. And so for that transactional nature, a bank is best suited to be able to handle that volume.
That gentleman back in the corner has been asked.
So we have like 2 questions back here, and then I have another one. So
I think Jim's up next.
Okay, just two things, and one is that make sure when you're using debt, use it as a tool and not as a crutch. I think that is extremely important, because one will facilitate your growth very well in your operations. The second will get you in trouble. The second thing is that there's a tool you can use too with a credit card to be able to get, instead of 1 month, to have your payment due as far as from a vendor, is you can use that credit card to pay that vendor at the end of that month to extend another month. And sometimes that's important in order to, for example, if you're in the construction industry, you get paid late. Contractor. Okay, so there's different things that you can do that are very useful. And that's basically the 60-day zero interest loan for you.
And just so you guys know, this is Joe and Aaron from the SBDC, just so you know. He's speaking from a lot of experience.
Jim, you have a question too, Jim, for
Yeah,
Sara.
I've got a question. So, I'm a business advisor with the SBDC. I work for Jen, work with Bryce. And one of the confusions that new clients have sometimes when they're a new client and they're looking for funding is they, partly they realize they rely on advertising that creates this message that lending is prevalent and fairly easy to get, which it is not. And then the other is that since SBA loans are guaranteed by the SBA, that there's no risk to the bank. And I have to explain to them, that's true, it is guaranteed, but if the lender doesn't do due diligence and the loan fails, the SBA can refuse to guarantee the loan. And my question is, have any of you ever seen that happen where the SBA said, sorry, you did a bad job, we're not guaranteeing it? Have you ever seen that?
Myself personally, on any of my loans, no.
Okay.
Same, since I'm primarily SBA lending.
Okay.
We do the SBA 504 and the
Yeah.
SBA Community Advantage 7A loan. We're pretty good at doing our due diligence.
Yeah, I'm sure.
So, but even with an SBA guaranteed loan, they don't guarantee 100%
No, I
of
know.
the loan.
I know.
And so the bank is at risk at some point, even
At least 15%.
if they dot all their I's and crossed all their T's.
Yeah,
But
explaining that to new clients is kind of difficult because they come in with a certain mindset and then you have to explain to them that that's not really the reality. And they're always, of course, disappointed.
So,
A question back here. Do you have a question?
Yeah, I was just going to comment on the remark that was made over here using the credit card. If you're a wise investor and you're good with your money, pay with the credit card because you're gaining 1% to 2% of everything that you buy through your credit card rather than paying cash or check.
And establishing your history as a reliable lender or creditor.
so we have a
Yeah,
question
go ahead.
here. This guy's been asking several times, so I'm sorry. Hello, members of the panel. I'm hoping to connect with you regarding criteria for small business loans on non-traditional business opportunities at the airport, AE concessions. Can you guys speak to that?
so you'll probably want to look for an SBA 7A because where you're going to be improving leased space, it's not an easy loan too, because the collateral, even though there's the fixtures and the equipment are the collateral, it's not, you can't necessarily go in and tear down all of those improvements. So it is a little more difficult loan. Your lender will probably look to taking some additional outside collateral, potentially your personal residence, some other property that you have. And it's a difficult loan to get a loan for leased space, just because you have that landlord and they have to be able to waive the lender coming in to collect their collateral in a default situation. There's just a lot more moving pieces, I would say, with going into lease space. It's not, you can do it, it's just a little more difficult.
And in addition to his question, he's asking, what tools do you guys offer, if any, to help with that type of situation?
So I would look at our Community Advantage. If you've been in business for 2 years, I would look at our Community Advantage loan. Our loan officer, Olivia, is here, who handles those. And because that is a SBA loan and there is that added guarantee, and makes it a little more attractive to a lender because they do have that backup if a loan goes bad. So I would look at an SBA 7A for that type. And then some lenders will do a 7A startup for that type of thing. It just kind of depends exactly what you're doing.
And come get free assistance on putting your projections and your loan package together from the SBDC.
Definitely,
Yeah.
100% all the time.
Depending on the amount that he's needing, Kiva could be an option as one of the non-traditional lending platforms as well. They have the ability to loan from $1,000 up to $15,000, again with no credit check. But there is, like the other advisor also said, there is some work to be done, and it is like I said, a crowdfunding platform. So they do ask for you to establish your characteristics and your trustworthiness through social capitalism in a way where you need to communicate with a little bit of your community that they are willing to support a small portion of your loan, and then the Kiva community will jump in and help with the rest of it.
Do you have anything to say, Sarah?
Yeah, just saying, depending on how much funding he needs, we only go up to 50,000, 10,000? 15,000. So just depending on how much he needs will kind of dictate where he goes. But if he were to come to us, we do look at, if he wants over 25,000, we require collateral. We might require a co-signer, we'll get credit, things like that. But yeah, just if he can figure out how much, one of us might be able to handle it, just depending.
Okay. I don't know if you wanted to weigh in or.
Yeah. I mean, operational wise, definitely here for any business. When it comes down to a startup business, what I'm interested to find out is, you don't walk into the airport as your first startup gig. It's typically you've started somewhere else. And so how have you gotten there? What's that story? And be able to share that and bring that to the table when you're talking to a banker. So, for a banker specifically, we're looking at what's the story, how did you get there, and I'm looking at the history in order to help predict the future.
Okay, yeah, go ahead, John.
Quick question. Let's say that you are fundable. How long, walking in to meet you guys for the first time, how long is it going to take to get funded? And I guess going back to, I can't remember what we said earlier, trying to predict when you need the funding. When should we go in, best case scenario, how long will it take to get a loan?
So for us, if you have all your ducks in a row, you're ready to go, everything's set, it's usually about a 2 to 3 week process.
Is that after that you meet or after I submit the application?
After you submit.
Okay.
So the only kind of difference with us is you're not just applying on paper, you're actually gonna submit your application, we go through everything, and we get you ready for our credit committee. And so for us, you actually come in and present to our credit committee, which is made up of bankers, small business owners, a group of people. You're gonna come in and present who you are, what your business is about. So it's not just you on paper, we get to really hear, your passion and why you're doing this and ask some questions. So we have those twice a month. So it's just getting you ready, having you present, and then closing. So about 2 to 3 weeks for us if you have everything ready to go.
Sometimes if you'll use your SCORE representatives and have them come in and speak with you and work with you, it's a lot easier to get your money also.
Yes.
So use that SCORE and use that free advice that's available to you.
Yeah.
Yes, definitely go see SBDC, SCORE, Women's Business Center. They can all help you get your financial package and application package together so that you have it. And a lot of them talk to all of the lenders to know what they're looking for in their packages. So they can be a huge asset to you because they have that knowledge. They also have resources that they can get to help you with your projections. They have all of these industry resources that they have access to, that they can help you prepare those viable projections, because projections are not simple. When the lender looks at them, projections, you want to have the ducks in a row. You want to detail how you arrive at those numbers and why those numbers are viable and how you plan to achieve those numbers with all of the facts and figures to go with that. My underwriters love facts and figures with the projections. But with us, it kind of depends on the type of the loan. Right now, SBA 504, you're probably looking at 6 to 8 weeks, depending on, right now, SBA's about 3 weeks in the review process on the SBA 504. So that the 504 is a fixed asset, large equipment acquisition loan. And Community Advantage, I would say 4 to 6 weeks, just because too, again, we have to send it to SBA and they have to review it, and then the closing process.
Yeah, go ahead.
Okay, and the Kiva process, and the application, if you have all the information that you're needing, you can fill out the application within half an hour to an hour. And then it can take up to 50 days. That is pretty much the full campaign, the fundraising campaign time. I have seen loans being funded within a week throughout this year as well. There's a lot of matching opportunities as well. But so, like I said, it can take up to 50 days, but it also can do a week. You have 15 days in the private platform where you're communicating with your family and your community to support that small portion originally. And then after those 15 days and you've reached the goal that they've asked you for, you move up to the public platform with Kiva, and you have an extra another 30 days on the public platform with Kiva to reach your final goal.
Awesome. Go ahead, Luke.
Within banking, from the point of that conversation, first, that's one of the biggest steps is having the conversation. So do come in and have that conversation. From that point, if it's unsecured, you're looking at the quickest be about 2 weeks. If you're using collateral that's not real estate, so say a truck or a piece of equipment, you're looking at about 30 days. If you're using real estate, you're looking at 45 to 60 days. That's best case scenarios. Now add on an additional 30 days for some back and forth, collecting financials, making sure that those financials are right, underwriting, as well as just time and communication. Be able and keep on having those conversations. The first conversation always feels like the most important one, but it's oftentimes the third to sixth conversation that is the most important conversation.
So we have one more question. Raymond Christie asked, the loans by Mountain West are only SBA loans?
We, hi Raymond. So we also have we have Community Advantage and the Utah Small Business Loan Fund. That's non-SBA, but that has probably a similar 4 to 6 weeks, depending, because we have a board, we get it prepared, board approves it. But that's non-SBA. It's a revolving loan fund that we manage. So that one we can do Tooele County, Utah County, north on the Wasatch Front. So Salt Lake, the airport, Raymond's with the airport. Yes, he's great. So if you're thinking about the airport, give him a call. Yeah, we have that. We have a couple loan programs there, so not just the Community Advantage.
Yeah, he was the one that asked those other questions.
Yeah.
Oh,
Okay, that makes sense.
Can you elaborate on those two types of loans that you have, the community advantage and the small business? What are you looking at? What kind of businesses, and just briefly if you can?
Yes, definitely. We'll want you to be in business for 2 years. Right now, we don't have, the only startups we can lend on is if you're purchasing a building or large equipment. But these smaller loans, they go from $50,000 to $250,000. Depending on the program, there's a variable rate or fixed rate, depending on what program it fits into, with up to a 7-year term. There's no prepayment penalty. It's fully collateralizing. There's no balloon payment, principal interest payment, and you can use that for working capital, for tenant improvements, for equipment, for some of the loan fees as well. It's kind of a basics. I would say it's a good tool for after Kiva, after bootstrapping, after friends and family, after Utah Microenterprise Loan Fund, but before you're truly bankable and go to Loop. So you kind of have the whole process of becoming truly bankable on this panel. So
what are the differences between those two then?
The one Community Advantage we can do throughout the whole state of Utah and the whole state of Wyoming. The Utah Small Business Loan Fund is just 9 counties that it can lend in. One is guaranteed by the SBA. One is just funds either from the Economic Development Administration, the USDA, or some some funds that are already there that they have. So that's a combination where the community advantage is solely SBA.
I think we had a question, yeah, in the back.
What's the best way to communicate with these different organizations? Because, everyone's looking for funding right now, so they're probably kind of swamped. So is it emails, is it phone calls? What's the best way to go?
All of the above.
Read the website first.
Yeah.
Yes.
And I think you'll all be here after, so they can come and connect with you and get your contact information after this event.
We'll post the contact information.
Yeah, we could do that as well, for sure.
Yep, call, text, email, look at our websites. We have a lot of information there as well as applications to even just start on.
Yeah, same. Our website has, who's eligible, what we do. We have our whole loan orientation on there. Like, we have so much good information on there, but sometimes people just skip it and call and like, wait, we have all this, and then we refer you back to it a lot of times. So I would say like check out the resources we have, and then we can like kind of help you from there.
I have a question.
Sure.
So we've talked a little bit about social factors becoming an emerging consideration. Do lenders look at average number of transactions or number of people served on an annual basis?
Especially in projection-based, if you are a restaurant, we'll want to know your average ticket price, your average amount of customers, your average table turns per day. So it's definitely industry specific.
Okay.
As far as knowing those key facts and figures, and the SBDC, Jim and his team, Women's Business Center, they can help you nail those down because those are important things to know.
Yeah.
Yeah, and they're really going to come across in your cash flow, and even if you're not open yet, in your cash flow projections, we want to know how you got those sales numbers, and you knowing, well, this might be my average ticket, this is how much I'm projecting, and we'll translate there.
And just to ground this into like an example, I'm curious, would you guys say that the average 2-year-old business serves more than 500 people a year? Or do you feel like micro communities are becoming what we see in like average businesses?
I think it depends.
Okay.
Yeah.
It depends a lot on the industry, but
Right.
it's not unreasonable for a business that's 2 years old to help more than 2 people a day. And in order for it to be a full-time business, I would absolutely, expect that. Now, if you're a part-time business, maybe you're not, right? Or maybe if you're a very high quality and low quantity, maybe you don't. I've had businesses where there's one customer.
Right.
And yeah, but that one customer is also paying, $12 million a year. So it can vary a lot.
Thank you.
Did you have a comment on that?
Yeah, if I could give the startup people some advice, I highly recommend go to the Small Business Administration. Talk to your SCORE representative, have them assign one to you, because they've been in business before. They already know what you're getting into before you even get started. We went to microloan. I want to tell a success story here. I had a veteran that was homeless. He had no credit, and he was just down and out. He was living between buildings. We linked him up. He had an idea of hauling scrap metal. We bought out a scrap metal company for him for $15,000. Microloan, worked with him, cleaned up his credit, and now he's making $90,000 a year. He's no longer homeless.
That's awesome.
So work with the Small Business Administration, get a SCORE representative, and have them to help you fill out that application.
Yeah.
Advise you how to do your business, but you got to find somebody that's motivated. You can't just start a business because that's what you want to do. You have to have an idea, you have to have a dream, and you have to have the passion for what you're doing. But not only does he sell scrap metal, but he picks up other things and sells online through just picking up things free to order up to scrap. That's a success story.
Yeah, go ahead, Monique.
This is for the non-traditional bankers. What criteria are you looking at for loans to small business? The non-traditional lenders tend to have more relaxed criteria.
Yes. Do you want to start?
Yeah. So we're trying to get like the bigger picture view. So we'll have you submit a lot, but we're not going to say, oh, bad credit, I don't know about that. Like we try and look at the whole picture. So we're looking, at your credit score. Does, you're telling us your annual income, does that match up in your checking and your taxes and here and there? We can tell if you're not telling the truth, or if you're trying to hide something we're normally. So we can tell. So, be honest with us because we work with so many people. Like he was just saying, we can make it work a lot of the time. We just need, this whole picture view. I forgot the original question. Tell me again.
Your criteria.
Yeah, the criteria.
Yeah.
So we will be looking for a business plan from you, a cash flow statement, so that can either be projected if you're not open yet, or if you are open, what are you doing right now? We will look at your personal checking, your taxes, things like that. You don't have to be an American citizen, but you have to be here for at least another 5 years for sure, or we might ask for a cosigner. Other criteria, right now we're not doing any lending to like alcohol or CBD or anything kind of like that. What else? What am I committing? Collateral. So if you are asking for a loan over $25,000, we are going to ask for collateral. That could be personal vehicles, your home, it could be, the equipment that you're buying, it just kind of depends on the situation. So it's different person to person, but that's generally what we're looking at.
I think the biggest difference with the non-traditional lending is the looking at the whole complete picture and then also being able to be more flexible on collateral. As far as being fully collateralized, meaning you have collateral value is 100% of the lending value, or the liquidation value of the collateral is 100% of what you're borrowing. I know with our loan programs, we will take collateral, but we don't necessarily have to be fully collateralized. Some traditional lenders, there's the FDIC and NCUA that put in things as far as collateralization, whereas other traditional lenders may have like over 100,000, they have to be fully collateralized. Whereas we, with our smaller loans up to 250,000, we don't have to be fully collateralized, but we would like you to be able to cash flow if you're not fully collateralized, of course. But I think that's the biggest difference is the whole picture, and also the flexibility of collateral.
And Kiva's that whole different situation where with the lenders, they want to see impact. They're not looking for a return in any form of interest. So the criteria in that one is they ask for it. So it's pretty much you put a picture of you and your business all in one horizontal picture. And you add your information about your background, 4 to 5 sentences about who you are, where you came from, and what is making you capable of becoming an entrepreneur, what made you want to do that. And then a business description of what your business is about, who is your targeted audience, and again, what type of impact does your business have on the community, and your loan purpose. Again, really knowing why you need the amount you are asking for. So Kiva is mostly it can work for startups. Granted, like I said, there's $1,000 to $15,000. The more information you provide to us, obviously the better chance to qualify for up to the $15,000. But they don't ask for, they do ask for a credit number, but they do not make their decision through credit. And again, there's no collateral check. It's all about who you are, what you're wanting to do, and presenting yourself through that profile application, and for the lenders to see that form of impact. Again, what type of impact will the funds do to your business and to the community is what they want to see.
I don't know if you want to weigh in. This isn't really your area.
I'm a traditional bank, so.
Yeah, for sure.
So I do have a question for the traditional banker though.
Oh, great.
Raymond Christie asks, does the traditional banker have any relaxed loan criteria lending?
Yeah, I mean, my most basic, credit app is simply just a credit score along with your stated income for the previous year and a quick debt schedule.
And like a line of credit is a great place to start, right?
What does that go up to?
10,000.
That's 10.
Smaller amounts can be easier to get because there's less risk.
And just to gain the trust, and build the relationship.
And, if you're operating after, a year or two and you want to be able to extend that, then yeah, come in, bring in financials at that point and you can increase that.
So I want to dig in on the personal credit factors that each of you look at specifically. I know obviously the score is a factor. Sorry if I hijacked the question. But what personal credit factors are primarily looked at to start up the funding? Is it, I'm guessing, history, your amount of revolving debt, hopefully none, and maybe like what your balances are available, what lenders have trusted you with in the past?
So we're really looking at, so we have you fill out somewhere else in the application. We have a questionnaire and we're asking, do you have any outstanding balances that we need to know about? Have you ever had tax liens or bankruptcies, things like that? If you say no there, and we pull up on your credit report, you've got, these negative things, like those negative things will inherently count against you. But if you're not being honest about it, like that's a big factor for us. And then we ask you if you have a plan, if there are issues, do you have a plan? What are you going to do about it? Because, we want to see, okay, well, if we're not repaying over here, are you going to repay us? So we want to hear, even if we can't repay right now, just a plan. And then we look at your credit score, but honestly, most of our clients are on the lower end. That's why they're coming to us. But yeah, I think the biggest things for us are like honesty and then plan.
Awesome.
Yeah, personal credit weighs heavily towards character. You look at it, and if you think about it, it's how are you managing your personal credit? It leads to an insight for us as to your character. We'll look at your score, of course. If it's lower, we'll want to know why. And then we also look at more of the derogatory items that you've had than necessarily the number of accounts and the amounts. It's more, what is your score? Why is it either good or bad? And are there any derogatory items and have they been resolved? And what was the reason behind them? But definitely, personal credit is definitely a character determinant issue for us.
And not to repeat it over again, but what Sara said was exactly the same about just honesty. And we do ask if you've filed for bankruptcy, what is your criminal record? If you have, does not mean that if you do have a criminal record, we're not going to offer you the loan. So again, just being honest, because the information, we are able to retrieve certain information. So we want to see what you are willing to offer us first.
Because the bank's biggest threat is fraud. Non-payment.
Yeah.
For WaFd Bank, what we're looking at is your personal credit as well as your small business financial exchange, and other factors, like get done Bradstreet. Those all things combining together into our proprietary look at business, right? And so some of those factors, other things that factor into it is, hey, are you an existing customer, right? Did you establish that checking account with us when you started? And as another big factor is actually within criteria for us is you need to be within 60 miles of a branch. We strongly believe in, investing in our community. One of our taglines is WaFd invested here. And that's because we were started by 6 business owners in Ballard, Washington. And we stick to that very tightly. You need to be within 60 miles of a branch.
Is there one within 60 miles of us, or where's the closest one here? Okay.
Absolutely.
Awesome.
We got 8 branches from Logan to Price.
Yeah, very nice. All right. Yeah, thank you for the question. I had a question that's kind of been coming up, and maybe you want to dive into this a little deeper. So we've talked a lot about building a relationship with your banker or lender. I'd maybe like to hear maybe some pitfalls to avoid when you're trying to build a relationship, or things that people should keep in mind when, building that relationship. What are, I don't know, maybe the things that help you and the things that hurt you. Maybe go into that. And if you have war stories, please share.
This is going to be right up Luke's alley.
Is it okay?
Yeah.
So there was a question earlier about communication, the best way to communicate. The best way for me to communicate is the top 2 ways that you communicate, not the best way that you communicate. We need 2 lines of communication. And oftentimes that can be phone and email, or that can be in person and email. Whatever that mix looks like, have 2 lines of communication. Communication is a tricky thing. And it's not always the words that are said, but also the meaning that's there. There's certain things that I can't say. I'm not a lawyer. I'm not a CPA. You're going to come to me and ask me questions that those professionals are going to be the experts to answer. And I can direct you that way, but it can be in a very subtle way. So if you come to me and you don't get the answer that you want, there might be a good reason why. Pitfalls to go back is going back to that honesty thing. If you say you're going to do something, do it. That goes a long way. And set the right expectations for yourself, and go over there. A lot of times I'll find a startup business just ready and raring to go, but then life happens, right? So, and things get delayed. Doesn't mean that things aren't going to continue on once we get whatever life threw at us going back and picked up. So set out a long runway for yourself, because running a small business is not a short game. It is a long game.
Yeah. All right. Do you want to weigh in down the panel?
And well, the relationship isn't just necessarily that your relationship officer. It is having that checking account, having that credit card, having that line of credit, because you're building the relationship with the officer and with the bank. So it kind of is all encompassing with that relationship, because it's easier to go in and get a loan with a bank or credit union that you go in and you have already proved that you can pay off a loan with them. You have that history, and it can be like, oh, these are a good borrower, I want to lend to them again. And so, just getting to know your officer and using the bank services, that builds your relationship and makes lending easier down the line.
Kimberly, I have a comment and a question. I'm a consultant. I'm in business for 6 years now. So I have borrowed money from banks and paid them off. It is just so it is just that I had a bad experience with a credit union. In the United States, 21 years, I always do business with credit unions. I love them. But I had a bad experience. I closed my business account with them. I still have personal account. Given that, I still like to bank with a commercial bank. There is Salt Lake City, because I get money from international clients. But question is on you said the client relationship. So that means I'm not your client. I don't have a checking account or credit card with you. Sent to you, right? So I'm not your client. Is that how you see it?
No, I'm building the relationship. It's easier once you have built a relationship. But if you come to us, we're going to help you, and we'll want to talk. So it's not necessarily you can't, because we're a non-depository institution, so you can't get a checking account with us. So the relationship with us is different than a traditional lender.
I guess my question there is basically, okay, if we are an existing business and we have a relationship with another bank, do you see that this business has a relationship with another bank for so many years, and you respect that, or you have to have your own and basically start again?
Yeah. So a lot of times if you do come to the table with that existing checking account, you say, hey, this is the history that's on my checking account. So I got 3 months of statements here. The biggest thing that a relationship matters for is that it lets us be able to see what the activity is. And it lets us see how do you move money, and goes back to one of the 5 C's of credit with character, right? And your checking account activity does not go into your personal credit score at all. But in a bank sense, when a bank looks at it, when I say, hey, I'm looking at my internal proprietary stuff, yes, I am looking at your activity in the checking account. What's your average balance like? What are your largest transactions? And how does money move? And then I compare that to if you have a credit request, how does this credit request follow up? Are you making $20,000 to $30,000 transactions on a monthly basis, and you're coming in to ask me for a $5,000 loan, and there's not a single transaction that's less than $10,000 in the last 2 months? That's going to be a red flag to me. Like, hey, what's going on? What costs $5,000 that what's the story here, right? Now, if you have in the inverse, $100 transactions all day long, and you're coming in asking for $100,000, okay, what's the $100,000 for? Right? That's a lot of small transactions that you're doing. What's the story that's in there? So that's what's one of the tangible things of why a bank will say, hey, having that checking relationship with us matters, and that's the why behind it.
Does the squeaky wheel get
Sarah says no. You said yes. I want to hear about that.
A respectful squeaky wheel, yes, but that was going to be my answer to your question.
That's right. Is it annoying or is it good? I mean, I'm talking about an annoying squeaky wheel.
Yeah.
Attention.
Yeah.
A fly?
Yeah.
That was going to be my answer to that question was, at least for us, we're a small team. We have maybe 5 employees. So we really want our process to be respected. And then, so that means if we're telling you to go online and do our orientation, or if we're sending you, hey, these are the things that we still need from you, and then you're calling, and then you're calling my boss saying, where's my money? And I'm like, but I still need these things from you. Like, that doesn't really help you at all, and it doesn't look good, right? Like, we want to know, do they have kind of like business etiquette? Are they going to follow instructions? Like, I don't know. At least for me, I'm like, let's do this first and not call over here, right? So I would say no.
I think the biggest thing is being exactly that, is being respectful. I mean, communication is good, and constant communication is totally fine. It's the being respectful about it.
So that's your client, that's your client rapport that you have with the lender. You need to be proactive, and you need to be talking to your lender. But you need to be proactive to make sure that process is moving. So you give them the right paperwork at the right time. You can't blame them that nothing's happening because you're not doing your part. Asking for that money. The more you're involved working with your lender, the faster your loan is going to go through.
Yeah.
But you have sometimes when, I'm sure all of you have experienced multiple times, there's just some people that are demanding and in their mind they deserve everything they ask for, whether they go to a restaurant or wherever. I mean, how do you deal with those people?
As a lender who did 14 million in PPP round 1, working from 6 a.m. to midnight, 7 days a week, yes, the squeaky mouse does get the cheese. But I can tell you that that mouse gets a mild cheddar and then doesn't get cheese, and then doesn't get another option.
So when it comes to a business that's also growing, like for my sake of my business, I was told to split entities because the capital is growing fast in both legs of my business. but liability insurance might be a little muddled. So I had to essentially create a whole new business on the second side. Do they look at the existing business as a part of maybe funding, let's say I need it, because it would be a startup, I have to do everything all over, EIN, et cetera. Do they look at the existing business in regards to what happens with the new business, or do they, if it's the same owner, or is it?
It depends on the lender.
Yeah, it
Really.
depends on the lender. We'll look at it.
And the structure.
Yeah, exactly.
Some lenders will look at just the entity that you're operating in. Some lenders will look at what's called a global picture. They'll bring in all the businesses that you are the owner operator of, and they'll look at your personal. So it depends upon the lender and how they consider it. So there's no clear-cut answer there. It does vary, and that's a great thing to bring up in your conversation with the lender.
Would that to be the point when, who do we go to discuss umbrella corporations and when that becomes financially beneficial? Is that?
Your accountant and attorney?
Your
Okay.
CPA.
Yeah, they're qualified to do that. They know how to do that. We're not.
And we had the question in the back.
Well, I was just gonna say on this example over here, she has a business that's been in operations for some time, it's been a successful business, and now you're in a startup. I think there's an advantage, depending if they're in related industries or not, to be able to use that to give you a little bit of horsepower for a startup. I think that a lender would want to be able to see that if you've had what you've been able to do with that other business and how it could support a startup. Or startups in general aren't that
And you can lend to yourself. That'd be nice. No, it's just, it is in some industries, so
Yeah.
that's good to know.
And to both questions in the room too, it also, matters for the lender if who's going to be guaranteeing the loan. So you can have one borrower, right? You got multiple guarantors. And so, are you bringing those other assets and those other entities to the table as well?
And you'll be hard pressed to find a lender who will lend without taking your personal guarantee.
Yes.
So just plan on personal guarantee.
Do you have any more questions online?
No more questions online, and it's 10 o'clock.
Any more questions in the room? We can take maybe one or two more.
Thank you.
Okay, yeah. No, thank you so much for joining this panel today. This was amazing information. I mean, there's a lot of knowledge in this room, so feel free to stick around after this. You can all stay, right? Or you have your places to be, okay?
Okay.
They'll be here to answer your questions if you have more of a personal question or I don't know, maybe not personal question. But Specialized question, that's a better way to phrase that. Thank you. All right, thank you so much.
Thank you.
Yeah.